Artificial intelligence has become more than just a buzzword in 2025. It has transformed from being an experimental tool in tech companies to the central nervous system of global finance. In today's world, where trillions of dollars flow through the markets daily, human decision-making alone cannot keep up with the speed and complexity of financial data. That is where AI steps in. It has moved from being a supportive assistant in the background to a core driver of how investments are made, how risks are calculated, and how ordinary people like you and I can grow wealth. But how exactly is AI changing investing in finance in 2025, and what does it mean for the future of money? To understand the impact of AI, we have to begin with the idea of scale. Financial markets generate billions of data points every day, stock prices moving every second, company earnings reports, consumer spending behavior, government policies, and even unexpected events like geopolitical conflicts or natural disasters. Traditionally, analysts and economists would take weeks or months to study and interpret these signals. Today, AI models process them in real time, drawing insights in seconds. This ability to analyze data instantly has changed the way investors react to the market. In the past, opportunities could be missed simply because the human mind and manual research were too slow. Now, AI spots opportunities faster, highlights risks earlier, and even simulates future scenarios with surprising accuracy. One of the most visible ways AI is reshaping finances through algorithmic trading. Hedge funds, investment banks, and even retail investors are using AI-powered platforms to predict short-term and long-term movements in stocks, currencies, and commodities. These systems can scan thousands of stocks at once, identifying patterns invisible to the human eye. For example, an AI system might notice a subtle correlation between social media sentiment and the share price of a company, allowing traders to make moves before the rest of the market reacts. In fact, many stock exchanges now report that the majority of trades are executed by AI-driven algorithms rather than humans. This doesn't just apply to Wall Street. Platforms available to everyday investors are also embedding AI-driven features, giving individuals a level of power once reserved only for professionals. But AI in 2025 goes beyond trading. It's influencing long-term investment strategies too. Robo-advisors, digital platforms that automatically manage investment portfolios, are now far more advanced than the basic versions we saw a few years ago. Back then, robo-advisors simply asked you about your risk tolerance and then recommended a mix of ETFs or index funds. Today's AI-driven advisors incorporate real-time economic data, news events, and even your personal spending patterns to create highly personalized financial strategies. Imagine having an investment portfolio that automatically adjusts when inflation rises, when interest rates change, or even when you spend too much on your credit card. These are no longer futuristic ideas. They are happening now, and they are making wealth management accessible to millions of people who would never have had a personal financial advisor before. Another powerful impact of AI is in fraud detection and financial security. As digital finance grows, online banking, fintech apps, and crypto wallets, the risks of fraud and scams increase. Banks and fintech companies in 2025 rely heavily on AI systems that detect unusual transactions in real time, sometimes blocking fraudulent activity before it even completes. These systems learn from millions of data points, such as how you usually spend money, where you shop, and what devices you use. If someone in another country tries to use your card in a suspicious way, AI immediately flags it, potentially saving you from losing thousands of dollars. For investors, this added layer of security builds confidence, encouraging more people to adopt digital finance tools and invest online. We cannot talk about AI in finance without mentioning cryptocurrency and decentralized finance, also known as DeFi. These sectors exploded in the early 2020s, but by 2025 they've matured into more regulated, more stable environments. AI is playing a central role here as well. From analyzing blockchain transactions to predicting the value of tokens, AI has become the backbone of how investors approach the volatile crypto market. Smart trading bots are constantly scanning decentralized exchanges, looking for arbitrage opportunities, buying low on one platform and selling high on another, all within milliseconds. At the same time, AI helps identify fraudulent projects, protecting investors from rug pulls and scams that once plagued the industry. This integration of AI into crypto has made the sector safer, faster, and more accessible, attracting both institutional and retail investors. Now, let's look at the role of AI in sustainable investing. Environmental, social, and governance (ESG) funds have become a hot topic in recent years, as more investors want to put their money into companies that align with their values. But one of the biggest challenges has been verifying whether companies are truly sustainable or just engaging in greenwashing. In 2025, AI systems analyze company reports, supply chains, energy usage, and even satellite imagery to measure the real environmental and social impact of a business. This level of transparency allows investors to confidently choose investments that match their values, pushing companies to genuinely improve their sustainability practices if they want to attract capital. AI is also changing the everyday experience of personal finance. Imagine opening your banking app, and instead of just showing your balance, it gives you predictive insights. It tells you that based on your recent spending and upcoming bills, you'll run short in 3 weeks unless you cut back on dining out. It might even recommend cheaper alternatives, saving strategies, or investments you can make with the money you save. This proactive guidance, powered by AI, is like having a personal financial coach in your pocket 24/7. It makes financial literacy practical and personalized, helping people build healthier relationships with money. Of course, with all this advancement, we need to talk about the risks. AI is powerful, but it is not perfect. Algorithms are trained on historical data, and that means they can inherit the same biases and mistakes present in past systems. If the data is flawed, the predictions can be misleading. For instance, an AI system might favor large established companies because they have more historical data, leaving smaller innovative startups overlooked. There's also the risk of over-reliance on automation. If everyone uses similar AI models to trade, sudden shifts could trigger massive market swings, creating volatility at unprecedented levels. Regulators are aware of these risks, and in 2025 we are seeing new policies designed to make AI in finance more transparent and accountable. Another concern is privacy. AI systems rely on personal and financial data to function effectively, and this raises questions about how much of your personal life you are comfortable sharing. Companies must balance innovation with responsibility, ensuring that customer data is not exploited or exposed. The good news is that regulators and fintech companies are increasingly adopting strict security measures, but as with any new technology, the risk can never be completely eliminated. Despite these risks, the opportunities are immense. AI is democratizing investing, breaking down barriers that once separated the wealthy elite from everyday people. In the past, if you wanted access to advanced financial analysis, you needed to hire expensive advisors or work in finance yourself. Now, anyone with a smartphone and an internet connection can access sophisticated tools that help them save, invest, and grow wealth. This is one of the most exciting changes happening in 2025, the shift from finance being exclusive to being inclusive. So, what does this mean for you, the individual investor or someone just starting your financial journey? It means that ignoring AI is no longer an option. Whether you're aware of it or not, AI is already shaping your financial decisions. From the way your bank flags a suspicious purchase, to the way your investment app suggests a stock, to how your credit score is calculated, AI is quietly working behind the scenes. The key is not to fear it, but to understand how to use it wisely. Educate yourself about the tools available, be aware of the risks, and stay updated as the technology evolves. In conclusion, the year 2025 marks a turning point in the history of finance. Artificial intelligence has moved from being an experimental tool to a mainstream force that is transforming everything from Wall Street to your personal wallet. It makes investing smarter, finance safer, and opportunities more accessible. But it also demands responsibility, both from the institutions that build these systems and from us, the people who use them. As we look ahead, one thing is clear: the future of finance will not be built on human effort alone. It will be a partnership between human intuition and artificial intelligence. And those who learn how to embrace this partnership will be the ones who thrive in the new era of money.